Yeah, at that time I'd said, we're going to have a 10 to 15% decline before year end. I think at the time there's a lot of skepticism about that. But there are a couple of things that are happening that we have to adjust to. The first is there's a fundamental change in the market, and that there was a little bit too much optimism priced in. The second thing that we see happening is that there's a technical shift that's occurring too. And that's that the things that had been working really well, large cap growth, technology, that was pivoting to more value-based investing. And so the thing that we're looking at is, it's not that the bull market's over, it's that we are now in a technical adjustment phase, and you need to invest in different things now than you were for the last 3 or 4 years.
Joe, for people that, I took calculus, luckily, so I understand the difference between a velocity and acceleration and what a second derivative is. So things don't have to contract, just the rate of gain can slow, and that can be reflected in valuations, I think. And it's exactly what we're seeing, right?
It is, and you also have the adjustment of higher interest rates.
On top of it.
Which makes equity investing a little bit less attractive. And then you have an additional thing that I think if the administration can take off the table, which is these tariffs, if they can address that, I think you'll see the market really find its footing and do well. But more than anything, what I'm looking for is a panic selling peak to occur. And I'm not sure that we're there yet. It's been very orderly. And what you want to see is the VIX sort of get to 30, 35. Everybody sell everything, and then I think you'll find that we're at a stable place and we can start to recover.
Joe, I don't know whether the president was watching you and said, I'm going to respond to this Joe Duran character. He says, but he did just tweet 2 minutes ago. He says the stock market is up massively since the election, but is now taking a little pause. People want to see what happens with the midterms. If you want your stocks to go down, I strongly suggest voting Democrat. They like the Venezuela financial model, high taxes and open borders. So what do you think? You want to, if you were to press that little thing about replying, what would you reply back to President Trump on that tweet?
I would reply that it's quite possible that we have a buyer's strike until the election. And then I would suggest it doesn't matter who wins. That in fact, as soon as you remove uncertainty, everyone does fine. The Democrats do well, we're not going to be Venezuela, because he's still there making sure it isn't. And so I don't think it really matters. We'll just have more of a stalemate. And reality is nothing will get done, and we're all slightly better off when the government doesn't get too involved in our lives.
That's a lot of people would push back from me on you for that comment, but not me. Joe, so I don't know if you've seen the show before, but yeah, you're not going to, Mike, you want to...
No, I think he's right about the fact that the main thing investors want out of the election is for it to be passed. And that's what has happened in previous midterm years.
I don't know if losing both houses would necessarily be a big boon for the market. So, Joe, do you think if they lost the Senate too, I'm not sure that'd be so great.
Yeah, I don't think that's likely to occur, and I don't think that's priced in. And candidly, honestly, what you'll find is people do not really move the market based on who's in power. We know and have seen that they're going to spend more money than they have. We know and have seen that maybe they might deregulate a little, which is really helpful, but they'll do something on the other side that's not so helpful, create a tariff war. So the reality is that the government, more than anything, gets in the way of business succeeding, and I'm not sure it's going to make a huge difference. What we care about more is, we're taking care at United Capital of our clients' entire wealth. And so it's really thinking about what can you do as a consumer and an investor to manage what you can control. How much risk do you have in your portfolio? Where is it invested? Do you have enough cash put aside to ride out a bear market? Those are the kinds of things that people should worry about.